Omnia today reported the strong interim results that saw revenue grow by 21.5% and diluted headline earnings per share increased by 52%, largely on the back of an improvement in margins. The dividend was also increased by 50% to R150. Here to tell us whether the company can keep this up, that's the key question, is David Lurkey from Avior Research. Well, there we go. Can it keep it up?
Not doing 50% on earnings every year. That's probably a little bit over enthusiastic, but certainly they can keep up some very healthy growth for a few years yet.
David, the fund managers, the local fund managers love the share. I want to ask you two questions. One, why don't the foreigners buy shares like this? And two, just give us a little bit of perspective on the company. They've built the sulfuric acid plant, which came in under budget and on time. Is that going to continue to grow earnings for them, or is it now built into the share price?
Okay, maybe to answer the second question first, it's actually a nitric acid plant.
Nitric acid,
for the scientists out there.
It shows how little you know about this environment. Are you sure you should be asking the questions?
Perhaps not.
Certainly, though, the new plant will carry on helping them out for a few years yet, in helping them grow. It's currently only running just over 60% capacity utilization. Over the coming years, as they grow into the new plant, that utilization will rise. You get a sort of not just a growing revenue effect, but also you get some nice operating leverage coming through there, helping to expand the margins from that new factory. In terms of the locals loving it and the foreigners maybe not getting involved, Omnia's had a phenomenal performance over the last 4 years or so. I think back in 2009, when I stuck out my first buy rating, it was at 32 Rand. It's trading at about 130 Rand today. So, then it was only a 3.5 billion Rand company. It was far too small to really be on the radar of the internationals. Even now, unless you're sort of over about 10 billion Rand, you're probably still a little bit small for the vast majority of internationals. When we speak to the London fund managers, it's just kind of too small for them, doesn't have the liquidity. The locals love it because they can see that it provides some very enjoyable or nice exposure to areas that one can be pretty certain will grow. You're never sure of the rates and the timing, but Omnia's expanded rapidly into Africa in both explosives and agriculture, as well as through its chemicals businesses, which is in Africa largely water treatment. So all three angles working well, playing the African theme there outside of SA.
I have one question. At 130 Rand, what should investors be doing with it?
I'm still busy running the numbers from today, so I can't tell you the latest thoughts, but broadly it does still offer a little bit of value. I've still got to update my numbers exactly there.
Sounds like potentially take your money and run, but we'll push you when you've done your numbers on that front. Warren, anything else in Omnia?
I wanted to, for the benefit of the scientists out there, what does the nitric acid plant actually produce?
Okay, so nitric acid is a step along the way to making fertilizer and explosives. Fertilizer and explosives are basically the same thing. It's ammonium nitrate, and your starting point is natural gas. You then make ammonia, which is nasty smelling cleaning fluid. From that you make nitric acid, and then you get ammonium nitrate, which you then use as fertilizer or explosives.
So in terms of this plant, it gives them the ability to drive economies of scale, and that's why we've seen the improvement in margins, and they're also obviously delivering more quantities of these products. So it all around contributed to the great financial performance that we've seen from Omnia. Contrast that against another player in the market, which is AECI. What's your thoughts on the two, and which companies should investors get exposure to if they want exposure to this particular segment in the market?
All right. Remember that while they both operate in sort of explosives and chemicals, they're at different ends of the spectrum. AECI's a chemicals business with some explosives, and its chemicals are highly specialized, and its explosives are very geared towards underground mining. Omnia is effectively a distributor of chemicals. That's a small part of their business. The largest part now is mining, and that is really open cast mining.
The largest part is mining.
Largest part is mining. Everybody still thinks of it as an agriculture and fertilizer company.
Right.
More nowadays, it is an explosives company with some mining chemicals within that. And that's much more geared towards open cast mines. So obviously AECI suffered badly with the underground platinum and gold miners striking recently. Obviously those guys weren't using explosives. Omnia hasn't been exposed to that. AECI's chemicals very driven by SA manufacturing activity, which has also been under quite a lot of pressure. So AECI hurting quite a bit at the moment. I certainly think there's space for them to recover quite nicely from that. From a pure valuation perspective right now, Omnia probably does look like a better bet. Still some sustained growth going forward there.
So it sounds to me like there's a little bit of both there. If you're a growth investor, a little bit there for holding Omnia, and a bit of value for the value investors in AECI. Would that be an accurate way of describing it?
I absolutely believe so, yes.
Okay.
Moving on to MTN. Now, when we were chatting to Adrian from Prescient, it's their top holding in their equity fund, and that's obviously according to their modeling. Your thoughts on MTN right now? I'm always surprised when people think that the stock can go further, given the fact that it's trading at almost all-time highs.
Yes, it is trading at almost all-time highs, but the dividends are also at all-time highs, as are the earnings. So you've got those aspects driving the share price. MTN, you know, if you contrast it to Vodacom in South Africa, pretty much everyone who wants a cell phone has one. MTN's operations, Nigeria, Ghana, Uganda, elsewhere in Africa, and a little bit in the Middle East as well. There's still a lot of people there that don't yet have a phone that would like one, and MTN is certainly well positioned to take advantage of the growth that is still available there. And I think if you just look at what Vodacom has achieved in South Africa over the last 4 or 5 years in terms of growth, MTN can achieve that in Nigeria, which is its largest market, over the coming years.
So Nigeria is why it demands the rating?
Absolutely.
This is introduces a bit of an interesting dynamic, because we talk about the growth, the geographical growth that, and penetration that MTN can roll out across Africa. But is Vodacom not able to do the same thing, not geographically, but with data in South Africa? They seem to be able to still grow earnings. We saw the results out a few weeks ago, and there's a big drive into data. You know, we don't use cell phones anymore for actually speaking to people. We actually just use it to get onto the internet. Is there not a case to be made that Vodacom can still continue to grow based on that changing composition of the service they provide?
Absolutely, they can. You do certainly see data growth coming through somewhere around 20% per year, maybe a little bit less than that. So the data business still has good legs, but as you say, we don't talk so much on the telephone anymore. And still more of their business is selling voice minutes than selling data. Data is large enough now to compensate for actually a little bit of decline in voice revenues that we expect going forward. Vodacom is not completely isolated to South Africa, remember. They do have, they are the biggest operator in Tanzania, in the DRC. They've got a very nice operation in Mozambique. So that also brings some value through for them there. It's just South Africa is a much larger proportion of their business than it is for the likes of MTN.
Okay, so just in terms of the last company in the telecom sector, and one which you've got a buy recommendation on, as you told me off air, is Telkom. It's seen a lot of change in management. As you said to me, all bad things don't always last forever. What's the thesis behind your recommendation on buying Telkom at this point?
All right, it's completely a value investor's play. It's offering very deep value because these guys have started a mobile business. ATA, half the people haven't even heard of it. It is the fourth operator in the South African market. Mobile businesses in their infancy chew up enormous amounts of capital. Certainly from our modeling, and certainly from this latest set of results, shows that they appear to have sort of passed through the bottom of the J curve there, and that the losses from their mobile business won't be quite so bad going forward. The market...
So this is not going to go the way of Telkom Media?
No. Well, I don't believe so. Is maybe the better way to put it. We'll have to see exactly where it pops out, but I think a lot of the absolute worst out of their mobile business is behind Telkom. They've got some new management coming in. Far more importantly, they've got a new chairman and a number of
Jabu Mabuza being the chairman. obviously the head of Business Unity South Africa. And what about the new CEO? Do we have any news flow? Have I missed something on that front?
We don't know who the new CEO will be. The current CEO, Pinky Moholi, has given notice till around about April next year. So I imagine Telkom will, early in the new year, announce the new appointment there. Obviously, they could do nothing with the chairman only having recently been appointed. I think the governance at Telkom will improve a lot now. We will have a legitimate board with a majority of independent non-execs. That calms government's influence, which has led to, should we say, suboptimal returns on capital in the past. So I think a lot of things are moving away from the absolute worst case
This is a refreshing
scenario.
view, because there aren't many out there that have been positive on the Telkom story. So
We just, absolutely, it took me by surprise when you told me that you'd got a buy recommendation out on Telkom. David, I just wanted to touch base on rumour that we'd heard around a tie-up between Cell C and Telkom.
I think I started that rumour. I did.
Well, maybe we should ask you.
If I was running Cell C, it's what I would look at. But anyway, sorry. I hope I don't have to. I hope I didn't start the rumour in the market. It's come all the way around back to this desk.
But just on that, David, have there been any substantiated claims or any insight that you've got on the potential tie between a Cell C and Telkom?
Certainly comments from Telkom management at their results a week or two ago suggest that, you know, for them any sort of M&A kind of tie-up doesn't make sense in terms of buying one another's shares and having a merger. What could possibly make sense, and you know, we'll see, who knows what kind of form this might take, if any, there might be some kind of partnership going on where, you know, Telkom's got great backhaul capacity in terms of fiber optics. Cell C's got a lot more towers than Telkom, and where they could maybe do some swapping of infrastructure there could help them out.